Hey everyone, it's Blair here at Time Trades. I hope you're doing great this weekend. This is the last weekly video for 2022. I'm going to be taking next weekend off. So this is up to Sunday, December 18th. Thanks for joining me. And we're going to start with a review of our forecast from last week. And that played out pretty well. You can see it here in TradingView. And the yellow line is the path that we forecasted, and after FOMC meeting happened, then the downwards momentum really accelerated. So I think I'd give myself, maybe an A-, B+ on this one, because certainly I got the direction right and it accelerated down into the end of the week. So in the rest of the video, we're going to be updating the forecast going forward, and I'm going to be showing a new toy or tool that I've created and added into Time Trades, and that's going to help us refine our forecast going forward. Okay, so let's do that right now then. We are going to take a look at the broader context of timing that we have going on right now. And let's turn on short-term waves, because that is really important. And we're going to take a look at the context of what's going on. We can see that the yellow line, or Mercury speed, is declining and decelerating quite quickly. The light blue line is Mercury-Venus separation in degrees, and we can see that that tends to tag important inflection points in the market. So we can see here that back on October 11th, it was very close to a low. Back on August 22nd, it was within 3-4 days of the high, the August high. So I like to pay attention to both of these to provide some context to help interpret the machine learning information that we're getting. Now, the new tool that I built and shared with Time Trades customers over the weekend is called a mass pressure index, and that's only available on one symbol right now, and that's the Dow. The reason is that a mass pressure index takes data, price data from 10 years ago, 20 years ago, and 60 years ago, and builds a composite of that. So let me just turn that on here. And we're going to turn off the Gann waves and short-term waves just so it's legible. And we're going to take a look at this mass pressure index. So keep in mind, the mass pressure index is really a blended composite of those three time periods, and then it's projected into the future. So there's no fancy machine learning going on here. It's actually quite easy to understand what this is doing. And this is one of the reasons why I find it super helpful, is its simplicity. Okay, so what is this telling us? Well, it's telling us that the composite mass pressure index is showing, well, first of all, it confirmed the down day or down week last week. So the last 2 weeks in the mass pressure index have been red. And really, we've got that multi-week downtrend established. We did flirt with new highs on December 13th, but those were sold off pretty aggressively. And so we're looking at maybe a mild up week next week. But then another week of down the following week. This is the week of December 26th, so right after Christmas. So it looks like we might extend down a little bit, but notice there is some spike highs here in the mass pressure index for next week, but then some more follow through. So this is a very interesting tool, but one of the things that I find really interesting looking into 2023 is these 2 big green weeks coming up into a forecast high on January 18th, and that's actually really close to the machine learning forecast high on January 23rd. So it's important to keep in mind that, not to take the mass pressure index too literally. It's, you can see here how it came pretty close to tagging the top, but it wasn't perfect. Nothing in this game is ever going to be perfect. And down here, it did get the low of the week pretty accurately, so that was good. But over here, you can see it was off by about 2 weeks in terms of the lows. So it's important to interpret this kind of loosely and not just trade it literally. Okay, so it's just another tool in our timing toolkit, and this is available today to Time Trades customers. So how does this help us build a new forecast going forward? Okay, so I want to go back to some of the context here, and there's really two main factors at play. Let me turn off the mass pressure index, and I'm going to turn on short-term waves. Okay, so the two factors at play are Mercury and Venus. So we've got the Mercury-Venus separation here, and that's light blue. We've got Mercury speed, which is yellow. Mercury-Venus separation making a new low next week, okay? And typically these inflection points do identify changes in trend. But then we've got Mercury speed making a low the week of January 6th. So that indicates potential for another lower low. And we can see how that played out over here, how Mercury speed indicated a lower low on the week of the 26th. So taking all that into account, we can update our forecast based on this information. There's also some other important dates coming up. We've got the winter solstice on the 21st. We've got a new moon on Friday the 23rd. We've got a Gann wave blue on Tuesday the 27th. So I still like the idea of one low next week, but I think there's also an argument to be made for a second low as Mercury continues to decelerate the following week. So the week after Christmas, I think that we might see a second low here. It could be around the same level, could be a lower low. I'm not sure, but this is something to be aware of here. And then I think after that, what we're seeing from both the mass pressure index and some of the machine learning is that we'll see a move up into the new year. Okay, so I'm going to update this arrow to reflect that interpretation. And this is all based on just interpreting the broader context around everything that's happening in the sky. So let's pull this back a little bit to reflect a low being made next week. But then we want to incorporate that information of Mercury speed declining, as well as the mass pressure index information. And I'm going to draw this as a low at about the same level, but it's important not to get too married to specific levels in this analysis. I'm not really focusing on levels. I'm focusing on time. All right, so this low could be down here. This low could be up here. So for argument's sake, I'm just going to put it right in the middle. And that's the week after Christmas, the week starting Tuesday the 27th. Okay. And then we're going to go up here into, and I still believe that we see this move up into, and I'm going to just kind of match the prior highs here of about 12,140 in mid-January. So, and I'm going to target the green, the Gann wave green there. So there's our updated forecast, taking into account all of the latest tooling and information that we've got at hand. And I really think that once Mercury starts accelerating again, then we'll start to see price move up. And we've got the positive effect of Gann wave GAN wave yellow, and we've got the new moon behind us, and we've got the winter solstice behind us. I think all of those are ingredients to a trend change, but often trend changes need a little bit of time to get traction, and that's what I think is going to happen over the rest of December. Okay, so let's go back to time trades, and we can do a quick review here of some of our other stocks that we normally cover. So let's start with the Qs, and I'm just going to leave on the short-term waves because you can see that they are they're pretty useful, but it may be a little cluttered on the screen, so just bear with me here. So what we're seeing here is, I guess my eye is drawn a little bit to this pivot low on January 3rd. We also have a pivot high up here, December 27th. Again, I think this reflects some of the tension in the forecast and the fact that we could be bouncing around a little bit down here. I really think these down days are going to invert, and I really think that we're going to see up days instead, just because of the broader context, right? Because we've got Mercury accelerating, we've got Mercury and Venus separating here. I think that we are going to see an inversion in this downward forecast as we move up out of those two events. All right. That's the Qs. Let's take a look at spiders. Spiders very similar. Spiders also has this cluster of down days here, December 30th. This is kind of the week before. So this is before Mercury reaches peak retrograde motion. And then we start to see some positive price probabilities here. So I think in the spiders, yeah, we might continue to go down, get a bit of a bounce, second push down on the week of the 26th, 27th, and then a move up into January. And there's another cluster of up days here, February 1st. But yeah, again, I think that Mercury accelerating is a positive here for the market. So we can see that play out. All right, that's the spiders. We already took a look at the diamonds. Let's switch over to bonds quickly. The 30-year bond is showing lots of upwards power and momentum in the forecast. We also have some pivot lows here coming up. So it does look positive for bonds. This implies rates going down. So let's watch that closely. I am going to turn off short-term waves here just so it's a little bit clearer. But bonds paused up here at this magic level at 109. So it looks like it's going to have to take a bit of a pause, maybe come back, regain some energy. We've got a pivot low here, December 23rd. And then we can see accelerating probabilities of moves up into the new year. How about short-term bonds, IEF? IEF is even more pronounced than TLT. We've got a higher probability pivot low on Monday, and then a nice ramp of positive probabilities into the following week. So if bonds do indeed move up, that does appear to be a net positive and supportive for stocks in general. Let's take a look at the dollar. All right, so the dollar got a bit of a pop from December 14th as the bearish FOMC meeting, or hawkish FOMC meeting, I should say, concluded. So what we're seeing here is some red in the forecast indicating probabilities that the dollar is going to move down here. Not a lot of clarity, I guess, in the pattern. I do like to line these up with some of the GAN waves, though. and try to get in sync with the Gann wave. So when you're looking at this offline, I'd encourage you to take a closer look at the yellow and blue Gann waves to see if you can extract some patterns here in the dollar. One of the things that we can see here is that Gann wave blue tends to identify major pivots. And let's see if that pattern reestablishes itself. The last time we had a Gann wave blue here, it was within a couple days of a pivot high. So maybe we will see something similar up here December 27th. Okay, let's take a look at some stocks. Apple. All right, Apple, lots of green here on the forecast. But then again, we do need to make sure that we incorporate price into our analysis. Sentiment's very bearish. Breadth is very bearish on the market overall. And it's also very easy for these positive probabilities to invert and turn into probabilities of down days. All right, so I think the takeaway here from Apple is there's going to be a lot of big moves in the next few months, and we need to be smart about playing the directions here and look for divergences in breadth and volume, and take the opposite side of those trades that are supported by the divergences. Okay, let's look at Google. Google also more green than red. However, of course, the broader sentiment and context in the market is bearish, but we do have a very nice cluster of green here heading into early February, along with a pivot high. So taking that literally, it does call for a nice move up starting early in January. Microsoft. Okay, so Microsoft, this is a good example of an inversion here. We can see, this green here aligns with some red days, right? So these probabilities haven't flipped over yet. And so this is something to be aware of. We see a big gap here in Microsoft's forecast and then some moves up starting mid-January. So again, I think this is supportive of the forecast of a move up into January, but I would not recommend buying now, anticipating that. Always better to wait because, there's a solid 3 weeks between now and January 10th. And that move could start from, way down here at 210, 215, right? You never know. Okay. So better to be patient here with Microsoft if you're a long only investor, and wait for this preferred timing to set up. We got a request for Tesla on Twitter. Let's take a quick look at Tesla. Again, it looks neutral to bearish. Certainly sentiment and price action very bearish, momentum very bearish. It's just slicing through all of these magic levels. You can see the power of the magic levels here at 199. That's that white line. It rejected price quite hard. And I think the next chance for a pause would be over here at maybe this Gann wave blue on December 27th after this cluster of red. And probably the better long risk reward here is January 6th. Until then, probably neutral to bearish on Tesla. Okay, let's look at our friend UNG. So yeah, UNG, huge moves this week. Again, super volatile. And we've got this pivot high up here, December 23rd, and then some red days coming up after that. So again, trading this, not for the faint of heart. You want to get in, get out, and take your profits really quickly. They'll evaporate on you really fast. But on the whole, the macro picture, I think, for natural gas is bearish, especially as the export market heats up. So if you weren't able to take advantage of this little pop here, that's perfectly fine. I think it might be a better entry to wait until early January here and take advantage of some of this cluster of green. Price may be a little bit higher then, but I think the timing probabilities will be on your side in early January. So let's take a look at crypto. Bitcoin slid back this week, slid back from about 18K down to 16K. But we're starting to see some signs of life in the forecast. We've got a cluster of green here starting early January as well. We also have a pivot high, which may invert. That's December 24th. This one makes more sense if it inverts and becomes a pivot low. We'll see. But yeah, pay close attention to price right around these Gann waves, because Gann wave blues can be kickoff time periods for new rally phases in Bitcoin. We've seen that in the past. So don't get lulled to sleep by the price action here in Bitcoin. Pay close attention to what happens around the Gann wave blue on the 24th. Okay, let's look at Ethereum. Ethereum also has a very nice cluster of green here that kind of starts around the 24th and ramps up into Gann wave yellow on the 6th. So we may be getting to a position of a very nice risk reward trade here on Ethereum. It's had a couple of chances to break through this white magic level at 1364. It may yet still break through it here, especially with this positive timing cluster coming up into early January. And let's take a look at Litecoin. So at last week's video, we talked about Litecoin having some red days in the forecast on the 18th and 19th, and it looks like those arrived a little bit early. We can see how important these magic levels are. I talk about them a lot. The minute we got a close under that 7601 magic level, it was just a big rug pull on Litecoin. So we're looking at in the forecast here, we see some opportunity starting December 23rd, and we see a cluster of green returning, and that may kick off a rally phase that leads into early January. So something to be aware of on Litecoin. I still like it from a bullish standpoint. I think that we've got some timing coming up here. If we're smart about when to enter, try and enter as close to one of these orange magic levels as you can. Maybe we'll get a spike down to 61. That would be great. And then there's a pivot high here January 1st in the forecast. So use this information, combine it with your timing or your price analysis and volume analysis, and come to a solid risk reward conclusion. All right. We're going to wrap things up with a look at the Nifty 50. So we've been talking about protecting profits on the Nifty 50 and NSEBANK for the last couple of weeks, and we can see why. We got that all-time high December 1, and the forecast had a cluster of red even back then a couple of weeks ago, and the price has accelerated downward this week with the FOMC news. So that looked like a wise move. Right now, we're a little bit neutral on the timing side for the Nifty 50. Not much here timing wise. Lots to say on price. I'll let you do your own price analysis. But we've got really another wave down forecast into late December. And then we've got a little cluster of pivot lows here, very small probability in early January. So it might be wise to just wait this out and see what the price action is like in late December. And the Bank Nifty is similar. Bank Nifty is In the short term, very neutral, not much to say on the forecast, but we do have some forecast moves up starting in early January. So looks like a potential for a bit more price volatility, just as the moves of last week complete. But on the whole, across the board, North American and Indian stock markets, looks like there's a potential for a bullish move up starting late December into the new year. And that's it. That's the last review video, weekly video for 2022. I'd like to thank you all for listening, and we'll see you again next year in January 2023. Take care. Bye now.